Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time to give you a fresh, quick summary of the last week in order to start your week on the market with the proper view and with the most important events in mind. So we are going to share with you a summary of the events from last week, starting with the 3 points. And quick reminder, if you are not subscribed to our channel, please give us a thumb up and subscribe. And click also on the bell to receive notification anytime we update new fresh information. Now going to the points I get ready to share with you today. The PCE inflation from United States published last Friday. We are going to analyze the impact of this PCE inflation, which is, I'm telling to you now, spoiler, neutral. We got the short-term and the long-term inflation crossed. One of them was above the expectations, the other one was below the expectation, and therefore I believe it was causing a neutral effect. I'm going to go into details later. Europe, US, and Japan macro data and its effect on the market. A quick review of what was the macroeconomical data published last week. For Japan, it was not good news. And it's also in line with what we have been analyzing from Japanese economy and the impact on Japanese yen and the movement on dollar Japanese yen, and also the movement caused in that Black Monday on August in Japan. Is still there, is still active, the risk of the Japanese economy, and we analyze that in a minute. NVIDIA results impact on the markets NVIDIA result, it was one of the biggest events for the last week, and it still didn't cause any effect. I believe most likely it's because we are expecting for today, for this entry new week, the labor market report has confirmation or rectification of the Federal Reserve posture in terms of the interest rate cuts. Go into details, PCE inflation and impact on the market. We got the monthly core PCE inflation published on Friday. We also got the analyzed core PCE inflation published on Friday. What happens? Both get crossed. The short-term one comes in above expectations. The long-term one, or the projection for annual PCE core inflation, comes below the estimation, which is positive. You know how it works. We want low inflation in order to get the Federal Reserve no fears, no concerns to cut the interest rates. I believe the impact was completely neutral. Still, I took a screenshot of that event. I took a screenshot by financialjuice.com where you can see what was the movement in the exactly minute after, which it was like a strength on the dollar and drop on the SP 500 and also rise on the returns of US bonds, which will show us a kind of low mood in terms of the interest rate cuts probabilities, right? In the other hand, we can see also the evolution of the dollar, which is making a kind of support in the area of 100 points, 101 points. By the starting of the week now is in approximately 101.50 points dollar index, which is good because it's slowly getting recovered against other currency and particularly moving back euro dollar to levels below 1.10, 10.50. We also have the SP 500 movements. It's clearly making a lateral movement right now. I believe 5,650 points is the resistance of the SP 500 index. Nasdaq, on the other hand, is doing something really similar. As you can see, getting into this point, even if the SP 500 will rise into 5,700 points, we can see important resistance there, and therefore any contraction could move the index to 4,500 points, even below 5,350 points, 5,150 points again, or even 5,000 points, 50 points randomly, right? So this is the expectations in case of any correction. We also have here a screenshot from investing.com with the results published there. By the way, let's take this opportunity to also include not only the PCE inflation, but also the initial job claims, which it was higher than expected, above the expectation, which is positive for the labor market, but is not positive for the intention to cut the interest rates, because obviously the Federal Reserve need to cut the interest rate under the context of US economy getting weaker, not getting stronger. So that's why positive macroeconomical data is actually bad for the expectation of interest rate cuts. Now, let me show you here. I will make you a comment on this topic in a few seconds on the presentation. But as you can see here, we also got the European data. and the Japanese ones too. So let's comment now, so we can just move forward on that case. We got inflation from Germany dropping to 1.9%, which is good. But still, the activity in general terms of the German economy is dropping. We also have seen the PMI starting this week, and it's also weaker, below 50. Better than expected, but still below 50, which indicates contraction. We also have what it is. Oh yeah, and on the other hand, one thing I was mentioned in the presentation is also that one of the reasons why maybe the inflation in Germany is dropping, which is good. Well, maybe it's not that good because it could be caused by the depressed economic activity, which is a drop on the economical activity in Germany that, in my eyes, is so clear. Since 2022, it's getting accumulated, that effect. In the case of France, for example, we also got inflation that is rising above the expectations monthly, 0.6% in August versus 0.5% expected. And the GDP of France it was expected to be 1.1% projection annually, and it drops to 1%. Therefore, we got higher inflation in France and lowest growth rate for the economy, which is moving us step by step to a scenario of deflation and even stagflation, which is no growth and inflation rising, which is the worst case for any economy. In terms of euro, we also got the inflation, the core inflation published 2.8% in line with expectations, and unemployment rate dropping to 6.5% to 6.4%, which is not bad. In the case of Japan, which I didn't mention, but it's still here on the calendar, you can see Tokyo core inflation annualized 2.4%, above the expectations. Industrial production 2.8%, below the expectation, which was 3.6%. Again, like in France, but in the case of Japan, is more accurate, is most clear that they are working into a kind of a stagflation situation, with inflation rising above the expectations, and with industrial production and economic activity dropping below the expectations, the worst case scenario. Market impact, I was saying here, challenge with the stagflation due to unexpected inflation increase, a decline in industrial activity, and it's affecting actually, let me see if we grab here dollar yen. Not here. It's affecting actually the exchange rate, obviously, because we can see that the dollar is not in the best moment. It's actually weak, as we mentioned a few minutes ago. But we also have the inflation in Japan is pushed the Bank of Japan to keep rising the interest rates and therefore making lower the dollar-yen exchange, which was causing the sell-off in the Japanese equity, because foreign investors want to recover the capital using the strength of the yen in top levels of the Nikkei Japanese market. Anyways, in the case of Europe, we got the index on the screen. It's going to do two new maximums. Starting on Monday, dropping slightly the prices, but more or less the German market is in the strongest points ever. Still, it's weird because we mentioned the activity is dropping. I would like to highlight also the effect on the French bonds. We can see a massive drop on the returns on the French bond that is obviously showing us that the risk is gone. One of the reasons, I think I mentioned this on the report, but one of the reasons is also that regardless the new government in France, they are compromised to keep cutting the deficit, the public deficit, and therefore keep going in the line with the European Commission request to get a drop. It's just for your record, it's 5.5% deficit in public economy in France, which is caused during the Macron government. Imagine with the new government, which is extreme lefty, Frente Popolare, and therefore they could actually expand the fiscal and deficit. Euro dollar is expected to get dropped. As you can see, the projection on the market is clear, and I think it's in line with the expectation of interest rate cuts from Federal Reserve. And now, ending with NVIDIA, you can see that post-earning drop, it was actually dropping 8% post-market when they presented the results. It was a few reasons for this. but mainly the sales was not in line with the expectations. And as we mentioned in our previous report, for 5 years, NVIDIA has been beating the expectation, and therefore it was actually we are bring concerns about the market could actually react in a negative way. It didn't. We have seen here the projection of the prices for Nasdaq. Nasdaq is it's getting weaker regardless the NVIDIA results, and therefore that's why we expect like the drops can continue. In SP 500 is getting flat, Russell 2000 is rising, Nasdaq is falling in general terms, and we also got in NVIDIA this shoulder head shoulder inverted, which could project the price. Therefore I believe in the next seasons, in the coming days, we see NVIDIA keep dropping the price to the area of $105. It could actually be attractive for new buyers come into this company, expecting to break out those $125 neckline that could project the price to a new top records in NVIDIA. Remember, this is not advice of any kind. Consult with a financial advisor if you want to invest in any market. That's all. I hope you enjoyed this report. Quick, fresh, and going to the point. If you like it, give me a thumb up and leave me comments on the bottom of the video, and subscribe to the channel. Take care. Bye-bye.